The upcoming week of September 16th, 2024 could be a pivotal one for both the U.S. economy and global financial markets, as the Federal Reserve anticipates interest rate cuts loom large. For months, the market has been pricing in the possibility of rate cuts, and now the time has come for the Fed to make its move. This decision is seen as a balancing act between managing inflation, which has come down, but it is still a concern, and addressing the growing recessionary fears that have gripped both the US and global economies. In my view, the Fed's choice will be a highly consequential for markets. A 0.25 basis cut is widely accepted and may be seen as the Fed's attempt to simulate economic growth without sending the alarm bells ringing. This modest cut would likely offer short-term relief to equities, particularly in sectors like technology, which have historically benefited from lower interest rate cuts due to the growth prospects they represent. However, if the Fed opts for a more aggressive 0.50% rate cut, it could indicate that their central banks see a deeper underlying issue in the economy, potentially leading to markets' volatility and investors' anxiety. This rate cut comes as a crucial time for the global economy as well. The US isn't the only one grappling with the economic challenges. In China, economic policy missteps and weakened demand have already shaken the global supply chains and caused disruptions. Especially in industrial commodities, investors are keenly watching whether the slowdown in China will create ripple effects that could further strain the global economy. Lower demand from China, coupled with the Fed's rate cut, could make for a volatile week in markets ranging from commodities to equities. In the tech sector, a Fed rate cut could provide a strong tailwind, particularly for stocks like Nvidia, which have faced recent turbulence but still remain favored by investors with the prospect of cheaper borrowing cost. The tech company may see a boost in their stock prices and their ability to invest in the future growth. However, the rich valuations of these stocks also means that in unexpected economic data, particularly weaker than expected earnings or guidance, could trigger a sharp sell-off even if rates are falling. Beyond the US borders, Europe's economic outlook remains another critical focus. With inflation somewhat under control, the Europe Central Bank, or ECB, is also contemplating further rate cuts, adding to the global shift towards more accommodative monetary policy. But even as central banks cut rates, the shadow of inflation hasn't fully disappeared. And any hits of rising price levels could force central banks to pause or reverse their rate cuts earlier than expected, keeping markets on edge. In short term, the coming weeks will be a mix of optimism and caution, while lower rates may provide immediate market relief. The long-term implications of these cuts will depend on how well the US and global economies manage to navigate to precarious balance between growth and inflation. Investors should brace for potential volatility as the market digests the Fed's decision and remain vigilant for any surprise data points that could shift sentiment rapidly. Anyway, to wrap things up, guys, the week of September 16th is going to be a turning point for both the economy and the stock market. All eyes are on the Federal Reserve. On the 18th is when they plan on making those cuts. Anticipating the rate cuts, it signals a major shift in monetary policy after years of high rates aimed at controlling inflation. While inflation has largely stabilized, concerns about economic slowdown and recession risk are taking center stage. In my opinion, the Fed decision will play a dual role. If it goes with a cautious 0.25% cut, it could reassure markets that Fed is still focused on managing inflation without signaling panic. However, a large 0.50% rate cut could spark concerns that the Fed sees more significant economic troubles ahead, leading to short-term volatility and a potential sell-off. Markets have already been pricing in cuts, so much of the positive impact may already be baked into stock prices. I hope you guys have a great one, and if you want to join me, click the More button down below, click that link tree, And if you have an open mind and a big heart, please just join the Discord and you'll find our family there. We navigate through showing you a few ways to trade. They might not be right for you, but they are right for us, and it'll at least show you a way of process. Or if you're just an enthusiast of the economic outlooks or a fan of what's going on in the macroeconomics as well, join up. We would love to hear your comments. We'll see you guys soon, and make sure you hit that like and subscribe. We appreciate you.